Good evening, guys. This is Henry Gamble with SimplerOptions.com, and in today's free video I wanted to take a look at ALK. Now, ALK, or Alaska Air, brings up a couple interesting things because today was such a sharp down day. So the stock opened down pretty rough, traded as low as down 4%, and broke down through the 21 EMA. So this is some of the first things that people will start looking at this and say, alright, well, it's closed below the 21 EMA, and it hasn't done that in quite some time. Is this an area where I can start getting short this? Well, first off, if you'll use a rule of thumb, and I always like using 2%, and this is just one of the things that'll, as a general rule, keep you out of trouble, where if a stock is already down more than 2%, think about playing it counterintuitively, and it doesn't mean that it will always set up that way, but at least it tells you, okay, if this is down hard, I'm not going to be the guy coming in here to chase it. Okay, well, we flip the mentality and say, is there something that I can do with this to the buy side? The daily chart breaking through the 21 isn't great, but overall we can tell that there is a very clear defined uptrend here. That's when I like to step back and look at some of your bigger time frame charts. In this case, off the weekly, you can also see that you've got a very clearly defined pattern of higher highs and higher lows. So what I like to do is hide my studies, which just gives us clean price action. And then I'm trying to determine what is the nature of this market, or what is its personality in relation to some of these corrections that we've seen before. From this swing high to swing low, you can see how those relationships are very similar, and in this case this is really the only one that I need to show. Now this one would give you a little bit deeper downside support if it continued to fall, but I just like pointing out how these levels can become so accurate. So that low for today was 62.53, and the low based off of symmetry support was 62.55. So first off, I think this keeps you from trying to short the daily chart. Then you recognize, okay, if I know that I'm coming down into symmetry support in an otherwise extremely bullish trend, and I know that it's falling at the same time, what is that doing? Well, it's driving up the implied volatility of those options, which gives you an opportunity to step in at support and sell those put options to people that are chasing them. So if we come down and look at February, you've got the $60 puts that are trading at 45 cents. Those may not be everyone's favorite trade, because if you do it 5 wide, it is a fair amount of risk for very little credit, but at least you're selling high IV at a great area of support. If you step out into March, a little bit better premiums there, and I really think that would be the trade to put on. Not quite as high as far as the implied volatility goes, but it gives you an area where you've got 39 days to manage the trade should it continue to fall, and you're still working an elevated implied volatility. So that's one way to look at charts, to kind of, if you find yourself chasing a lot of moves, flip back to that bigger time frame, reference those, and I think that will help your results in the long run. One thing I wanted to make you guys aware of is a free webinar that we're going to be doing on Tuesday, February 10th. That will be at 8 p.m. Eastern Time, and this is going to be on the waves. So we haven't talked about the waves in some time. They are still an indicator that John uses on his charts in a couple of different ways. Here are some of the topics that will be covered during that broadcast, and of course it is completely free. So if you guys would like to join us, there are some of the details, and we'll touch base at the next free video.